monetary tool, they are short-term tools. And if you look at some of the challenges we are facing, there is stalling inflation, there are structural issues which monetary tools may not be enough to address. So there is need for that handshake between fiscal and monetary policy so that we can sustain there has been positive sentiment around the reform. So we have to ensure that that is sustained, and that requires that handshake so that there's clarity for investors to know, okay, this is the plan, and they're able to plan their investments in Nigeria.
Welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition, we're looking at the state of the Nigerian economy, monetary and fiscal policy implications for households. My guest is Funmi Adebowale. She's the head of research, Parthian Partners. It's great to have you on the conversation.
Thank you for having me.
And Happy New Week.
Same to you.
It's a major week for the MPC. We'll get to that much later. But let's first begin with the inflation rate in the country. Just received that figure, and we've seen that it's hovering around that 15% mark at the moment. We'd just like to know what has been the key drivers of this inflation from the first quarter of the year. What has been the key drivers?
So I think it's important to just take it a year back. We've seen inflation declined consecutively for 11 months. And most analysts were saying at the beginning of the year that inflation could touch in a single digit. However, the Middle East crisis came, and that changed the narrative. We saw inflation increasing to 15.38% as of March. In April as well, we saw headline inflation also increasing. However, the good news is that month-on-month inflation is down. But could that be read as a form of disinflation? Not yet, because we are still seeing the impact of the Middle East crisis. So it depends on how that is being managed for it to have a pass-through effect on Nigeria. And the good thing is that it's also happening at a time where our Naira is stable, because it would have been a double blow if the Naira was struggling and energy costs is also up. So I think that's just it. So it cannot be read as whether a good or bad thing now, because this is just a knee-jerk reaction to the Middle East crisis. So we need like 2-3 data points for us to say, okay, we are now, the disinflation trend has been reversed, or we are still on that path.
So we just need to see 2-3 moments of the inflation to understand the trends. But of course, the Middle East crisis
is a major factor, yes.
The energy effects, pass-through effects. And several economists have looked at, of course, the fact that we could hit the single digit. We've been really, really desirous when we come to that single digit in inflation, which begin to have effects on Nigerians. And our neighbors in Ghana have achieved that, but there's a lot of debate around that.
It's actually not unachievable. That is the truth. But achieving it in Q1 to show that it's not possible. But before the end of the year, depending on how much we're able to manage energy costs, that would send a signal to at least maybe the upper limit of the CBS target is about between 6 to 9. So we are aiming at that upper limit. So it's not impossible. We've seen about 4 African countries, the likes of Ghana, Zimbabwe, and the likes achieving that. So Nigeria is not an exception. But that will require, actions from both the fiscal space and the monetary space. We've seen the MPC tighten rates in the last couple of months. So there's need for that coordination, because monetary tool, they are short-term tools. And if you look at some of the challenges we are facing, there is stalling inflation, there are structural issues which monetary tools may not be enough to address. So there's need for that handshake between fiscal and monetary policy so that we can sustain there has been positive sentiment around the reform. So we have to ensure that that is sustained, and that requires that handshake so that there's clarity for investors to know, okay, this is the plan, and they're able to plan their investments in Nigeria.
And at the receiving end are businesses and households. I mean, cost of living globally and in Nigeria is at a high. Take major things that hardly hit the households and businesses. Look at transportation, power, energy costs, and also the issues around food, price of foodstuffs for consumers, and even rent, like housing issues. So when we look at all of this, how would you advise households and businesses to navigate this period as we begin to see the whole issues unfold?
Yeah, so I would say that Nigerians are actually strong people. We are already seeing people adjusting into it. And if you also let's look at the components of what constitutes consumer spending, transport is very key. because I can decide not to eat, but I won't have strength to walk to the office. So transporting myself to the office is very key. So the rate at which I can resist any price change is limited. But in terms of food, people can decide, okay, I'll drink water in the morning, have brunch, instead of breakfast and lunch, I have brunch, I have dinner. So it can adjust. And that is why we are seeing the impact on food. We're not really seeing that impact because demand is slowing down. People are adjusting, trying to restructure their budget and all. But if you see rent, you see transport, the rate at which people can react to that price change. So I would say it is relatively price inelastic for those commodities. But for food, we are seeing people actually react. And that is why most manufacturers, or let's say traders, are not able to pass on the additional cost to consumer. They are actually absorbing that. And that is also not so fine for the economy, because we'll start seeing the impact of that in companies' results, especially from Q2, because now you're dealing with reduced demand, you're dealing with high costs. So definitely profitability will suffer. So, but I think what Nigerians can actually do as individual is there's an option of trying to, I know sometimes depending on your income level, you cannot say save more and all. So it depends, there are different strokes for different folks, depending on the buckets where you are in. For people that at least, if you earn above 500,000, depending on the kind of family that you also have, you can say, okay, let me just go through the pain now, increase my savings. And there are a lot of variable investment options in Nigeria at the moment. Look at the equities market, that has done over 60%, over 60% this year. The money market funds are also doing well. So you can say, okay, let me take the pain and increase my savings. But for somebody earning 100,000, how do you want to save more? It's not even enough. So for those kind of people, I think, well, one thing you can do, focus more on spending that are critical, then also think of scaling so that you can increase your earning power. So I think that is very important. People also say that look for side hustle, like they term it. I also advise that the side hustle should be something related to what you're doing so that you're not burnt out. So I think those are the options that I think Nigerians should be able to explore at this point in time.
Yeah, savings and exploring investments and upskilling.
Upskilling,
very critical, because the whole challenges will still be lingering, but the resilience is very important.
Exactly.
I like that. And let's look at the risk. Now, there are risk, of course, looking at the economic space and all that, from the rising fuel costs due to the energy issues. The geopolitical tensions have hit into that. And then, of course, the pre-election, okay, we're seeing the pressures, fiscal pressures, pre-elections, and other risk highlighted. ProShare, working with the Economy Associates, have highlighted some of those risks in its recent report on Country Watch. I mean, some of them that are interesting are the issues around the fiscal pressures pre-election, and also the issues around the geopolitical tensions that we've seen in the Middle East. But what should fiscal and monetary authorities be doing at this time? What is critical? Because we always keep hearing this fiscal monetary policy alignment. So when they're aligning, what should be the focus so that we can sustain the economic recovery and also this inflation that you said will still monitor the effects?
So I think from the monetary point of view, we've seen a lot of hard work. We've seen the CBN tighten its policy, which has helped. So, reduce inflation to an extent. You're also seeing them using a lot of OMO tools as a form of, driving in FPIs and also a form of liquidity management. So we are seeing good work from that end. So that has to be sustained. Another important thing we've also seen is the sanitization in the FX markets. So we've seen the introduction of the FX code, the FEMS and all. And this is actually sending positive signals to investors. And we are seeing the impact on the exchange rates. Naira has been, in fact, I think in the last 2 to 3 months, it has appreciated above 1,400, so it has been at 1,300 level, so which is good. But there's also there's need for that policy handshake with the fiscal authorities, because like you mentioned, it's pre-election season, you see a lot of money in place. So financial discipline at this point in time is very important, because we've gone through a lot of pain since mid-2023 after we removed subsidy, liberalization of the FX market. But the good thing is that foreign investors are taking it with positive vibes. And we're also seeing adjustments. We're seeing the FTS, Ruzel, reclassifying Nigeria as a frontier market. We're seeing a lot of positive signals from investors. So this has to be maintained, because the cost of having a policy that changes that narrative is very high. So maintaining what we have done, let there be clarity. Transparency is also very important, because investors worked hard for their money. So they want an economy where there's clarity, where they can plan and say, okay, in the next 6 months, I want to take my money out. This is what is expected. So I think that is very important at this point in time. So that handshake between the fiscal policy and monetary policy is very, very important.
Yes, very, very important. And still speaking about fiscal, recently the Minister of Finance, coordinating Minister of the Economy, talked about the fact that we can't borrow away to development. I don't want to talk about the borrowings happening now, of course, but there's so much conversations around that. The government has been borrowing, and people really need to see the impact of that. But from your perspective, because of course Proche has his position in writing extensively on how government should approach the asset-centric approach. From your perspective, what are those sustainable, viable options for financing our deficits in a way that it achieves inclusive and sustained economic growth?
Yeah, so the truth of the matter is, to achieve sustained economic development, you can't rely solely on borrowing. Yeah, so borrowing could be a form of, getting funds for infrastructural. So the issue, I think we should even start from, is borrowing the issue or the utilization of the funds? So if those funds are efficiently utilized, that in a way that they can pay back both the principal and the interest, it might not be an issue. But at the same time, you cannot rely solely on borrowing. So the option of, like look at Dangote IPO that I was saying. In fact, an average person, anytime I go to church, people will ask me, when is Dangote listing? I want to be a partaker. And it shows how people are eager to invest in those kind of economy. So if you can apply this model and maybe list some of our state-owned enterprises, the likes of NNPC, LNG, and moreover, look at the PIA. It's already said, okay, yeah, it has made NNPC now a limited company. So I think the next step is, okay, come to the public. Because I think one thing we are suffering in Nigeria is that public trust. So by the time you list some of these state-owned enterprises, their financials are out there, there is more clarity, there's transparency and all. I think it will go a long way. Look at Saudi Aramco.
Yeah.
So I think we can actually explore this thing and bring it home. It's a season for hard work. Because we've done so much, we sacrificed a lot. So at this point, we can't afford to we can just say how to build on this thing. And by the time Dangote IPO list on, I'm sure it will pave that way for listing of other state-owned enterprises, which is positive. And it will be a way of, getting funds, not relying solely on borrowing. And apart from that, I also feel that there's need for investments. We are seeing a lot of foreign portfolio investment in Nigeria. Can we also focus on driving in more foreign direct investment in critical sectors? So there should be a clear roadmap that can attract foreign direct, because foreign portfolio investment is more like hot money. They are in, they are out, exactly. Well, FDIs are more stable funds. So I think there's need for that policy consistency, clarity that can drive in more FDI flows into Nigeria.
I like the last part. I mean, investment policy has been discussed over time. So I think the Federal Ministry of Industries, Trade and Investment have their work cut out. Let's have that robust investment policy that attracts FDIs.
Exactly.
We really need FDIs. And Dangote IPO should support the government.
In fact, what's the one interesting thing about Dangote is because we're also trying to analyze there's a news of him also trying to list on other African exchanges like Kenya and all. I also want to know, is it going to come in full? Because based on evaluation, $50 billion. So if you list 10%, that's like 5 billion, which in Naira terms is 7 trillion. And that's about 4% of Nigeria's market cap. If you're coming in full force, what that means is that people can also start selling down their portfolio to be able to invest. So I think the strategies around that also will determine how that is going to really to impact the market. But people are really actually optimistic about.
So in your words, that's going to be a game changer.
It will.
All right. Good. Let's come down to the big one for this week. The Monetary Policy Committee meeting, the second one for this year, 2026, Central Bank of Nigeria. What should we expect? I mean, we've seen the inflation trajectory, we've seen the whole geopolitical shocks, we've seen the whole developments, because that's normally what the CBN governor will be talking about tomorrow when he makes his decision. So what should we expect in terms of decision and implications for the economic markets?
All right, so at Parthian Partners, we believe that the best decision at this point in time is to maintain status quo. Yeah, at the February meeting, MPC reduced rate by 50 basis points. So with this new development in the Middle East space, and if you also recall, the governors, the MPC chair said, decision will be strictly based on data. So now that there's a structural shock, so it's just probably wise or safe rather to monitor how it will impact inflation going forward, and also there should be clarity before taking any bold step. But in addition to that, if at all we could see some adjustment, maybe there could be a tinkering around the asymmetric corridor, and that's because, you know, if you look at what is happening in the fixed income space now, we are seeing DMO not really, they are not borrowing aggressively. What that means is that they are also concerned about the costs of borrowing. So in a way to manage that, we could see some tinkering around that space to be able to reduce SDF and that could send a downward signal to rate in the market and all. So that, but by and large, we expect the MPR to be left unchanged.
So status quo retain, but some tinkering may happen
may happen, depending on what the members are actually considering.
Very beautiful conversation. I really enjoyed this with you, Funmi Adebowale, Head of Research, Parthian Partners. And we hope that we'll begin to see some stabilization, proper signaling, communication, alignment between monetary and fiscal policy. And of course, the Dangote IPO should trigger government to begin to leverage the market, list as state-owned assets, and of course, enterprises.
Exactly.
But thank you once again for this time. And we look forward to the MPC decision tomorrow, Monetary Policy Committee meeting of the Central Bank of Nigeria. Thank you once again. To our viewers, that will be all for this conversation. If you want to get further insights on this, visit our website displayed on the screen, and also follow our social media platforms. Also, for the Central Bank of Nigeria Monetary Policy Committee meeting decision for tomorrow, you can follow the activities and the decision impact on the ProShare website displayed on the screen. Till we come your way again, I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.